Hello, everyone, and welcome to another edition of the market update for Wednesday, March 15, 2017. Yesterday, or in front of us, we have a chart of the S&P 500, and yesterday I indicated that the market would attempt to test this 2350 region, and we should look to see if support holds at that region. And that's exactly what happened. We see where the market, looking on the hourly charts, we see where the market came down, came in. The low of the day was 2358, and we're bouncing out of that level at this point in time. So this 2350 level is fairly is medium term support in the S&P 500 at this point in time. If we do manage to close below that level, then what we could see is a larger sell off, maybe even down to 2300, or test the 2250 region. The markets right now, the S&P 500 is actually trading up as of this recording. The market is up 8. S&P 500 is up 8. The Dow is up 50, and the Nasdaq is up 12 points at this point in time. Taking a look at the chart of the Dow Jones Industrial Average, similar setup as what we saw with the S&P 500, where the market came down to test the support area just above this 20,800 level. We see that the market tested this area of support and has bounced slightly. If we do manage to close below this 20,000, actual low is 20,777. If we see a daily close below that level, we could be in for a wider pullback in the S&P, in the Dow Jones Industrial Average. It looks like the market is taking a slight break, because we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, roughly 2 weeks of trading that the markets are in very tight ranges. And what this could be a prelude is that the market could test the all-time high that was made at 21,169. And it will be interesting to see if the market can close above that level. So the ranges are the prices to look out for in the Dow is 20,777 and 21,169. Taking a look at the German DAX, the German DAX this morning is also up on the morning. My chart is just taking a little while to load. Let's try it again. Yes, the German DAX is up on the morning, and an interesting thing with the German DAX is we are still below the all-time high that was made in back last year, I believe it was. Okay, so this is a weekly chart of the German DAX, and for those of you who invest in the German DAX, it's important to pay attention to what is happening here. The market is still below the all-time high that was made in 2015. Now, what will be interesting is to see if the market actually does trade to this level, how the market reacts to it, because what we could be seeing is the potential for a double top in the market. This level just below the 12,500 is significant resistance, and these resistance areas should be paid attention to. So if we trade up to this level, it will be interesting to see if the market starts a decline and we see a larger decline, or the market is able to punch through that level. If it punches through, that will be fairly bullish. If it declines, that could be potentially very bearish for this market. And let me just give you another example of a double top situation, and that was in the S&P 500 leading up to the 2008 market collapse. Okay, let's go back to 2007. This was a high that was made in the year 2000, and it was important to look at how the market reacted to that high. And as you can see, the market went up to this high, tried to trade above it, and ultimately failed. So this market started to top out well before 2008 because we saw a failing at this significant resistance level. And ultimately, we got a sell off in the markets. And that's why it's important to pay attention to what these charts are saying. Because the charts tell you the full story. You can look at the price action and say what is happening in a particular market or a particular stock. So it's important to look at it, and we'll be paying attention to the German DAX in the next couple of weeks, whether the market trades above it or goes below. Taking a look at the US dollar index. Let's look at the daily chart. US dollar is slightly down, and for the last couple of months, ever since we got that huge rally in November, market topped out in December, we have been very range bound in the US dollar. It's not really going anywhere, and as I have been indicating, this is a head and shoulders looking top. If the market is not able to punch above this 102.50 level and close, that would be fairly significant with the US dollar index. So this is something we are paying attention to. For those of you who are chartists, this is the head, this is the right shoulder, left shoulder, right shoulder, head. This pattern is not complete as yet. The market will have to turn down and close below this level for it to be complete, and that would signify a significant top in the US dollar index. And something to pay attention with the currencies is that yes, they are range bound now, but once they start getting moving and once they start trending, they can definitely be very profitable and a boost to your overall gains. Taking a look at the gold market, something that's also range bound at this point in time. Market is in no man's land. Let's just draw the triangle. I see a lot of literature out there to say gold is going to skyrocket, but at this point in time, the market is just range bound, and it will be better to wait until the market makes it move before you get involved, because although the market could break to the upside out of this triangle and it would be bullish, it could easily also break down, and if we see it closing below this 1130 region, it could be breaking down into the 1050. So you have to just be very careful at this point in time and let the market show you the way. Also, remember that I'm hosting a live webinar on Thursday, March, on this Thursday, which is March 16th, 2017. And this webinar is going to show you, we're going to highlight the possibility of the Dow declining over 70% over the next year or so. And we're going to look at that possibility and what you can do to protect your portfolio, to not only protect your portfolio, but also to profit. There is a myth out there that the markets have to be rising and going up in order for you to make money in the markets. And that's something very far from the truth. So we're going to be taking a look at that. This will be definitely beneficial to you for you to attend. So it's Thursday, March 16th at 8 p.m. Eastern Time. Please arrive early. We're getting a lot of registrations and the seats will fill up quickly. Thank you very much for listening. In order to sign up for the webinar, you can click on the link below this video. There's a link below the video. Click on it and get signed up. And I will see you tomorrow evening. Thank you very much for listening and have a good day.